having a session. Today we'll be having a session on investment readiness and fundraising. So basically, let me share my screen. Sorry. So like I mentioned, we're doing the session today, and we'll be discussing on investment readiness and fundraising. This has been one of the key areas for entrepreneurs, especially in Africa, where we know that raising funds, any type of fund, is something that is very challenging, will be very hectic. And most of the entrepreneurs really struggle in this aspect of their business, because most of the time you need a working capital, you need money to be able to buy technology, you need more funding for cash flow, you need more funding for scaling and all that. Of course, there are different kind of funding options that are there, but we know that getting access to these funds requires some kind of exceptionality in your business, how you position your business, how you be able to tick the boxes and be able to connect with the right investors, how also trying to understand where you are in your startup value chain, in your entrepreneurship value chain, and who are you supposed to be speaking to. So the objective of the session is to help entrepreneurs to be able to structure out their business for investment, and also learn about different funding models. So at the end of the day, I want you guys to be able to understand what are the key metrics, what are the things that investors actually look at for when they want to invest, and also how when you understand the metrics, you understand the gaps you have, how you are going to be able to improve these areas, so you can be able to attract the investors. Then you also be able to learn maybe a bit of like evaluation and learn about maybe like fundraising strategies, the type of fundings that are there, and how you can be able to leverage on them. So as we continue, you can ask any questions. At the end of this session, we are going to do actual practical. So I hope all of you are using your computers or your phone, because there's a link where you are going to test out your investment readiness, and we can be able to analyze at least one or two and know what are the areas that you need to improve and how you are going to go about that. So the session is also almost going to be very practical, because at the end of today, I want the entrepreneurs to be able to have a clear direction when it comes to investment sourcing and how you are going to better prepare your business to be able to qualify for these investments. Also, if maybe I am fast or maybe you don't understand, kindly speak so I can be able to respond. So, like I was saying, one of the biggest challenges that entrepreneurs face is to be able to reach investment fit, to run investment fit business. Here, for us as entrepreneurs, most of the time we focus a lot on our product. We want to make it. We've become too attached and too passionate about how we want to structure our product and all that. But when it comes to now looking for investment, there are key things that we need to do to become investment ready. So most of the entrepreneurs go to the wrong investor at the wrong time. So you see, maybe someone is starting off, they want to go to a VC that is giving 500,000 ticket size. Of course, it cannot fit into what they are looking for. So it's also very important for entrepreneurs like you to also know what level is your business and who are you actually supposed to be approaching for any type of funding. Also, because we are more on the female side, the female entrepreneurs, there's also gender-less disparity in investment across Africa. You can look at just around, not just not up to 7% of the total funding go to female founders in Africa. That was for last year. And that means out of every $15, a female entrepreneur gets just $1. This doesn't look a bit, where it's supposed to be when it comes to having a inclusive funding strategy. All of this is at cost, maybe based on sometimes some of the investors trust maybe men, or also some of the female businesses are not very structured to be able to receive the investment. So those are the kind of things that I really want us to change. And when we start thinking investment, we should really know what are the things that the investor is going to look at for. Where am I? How am I going to improve in those areas? So those are things that you are going to see very soon. So like I mentioned, some of the things that investors want to see when you are going to pitch your idea to them, especially maybe after this program, you are going to pitch to the bank, you are going to pitch to angels, or you're going to pitch to some close friend to invest, or even a VC. You should take note of some of these things that will really tick for you. If you are able to position your business having the right answers to all of these areas, then it becomes very easier for you to convince an investor. So some of them which we mentioned in this presentation are the problem you are solving and the vision. So the vision has to be clear. The team composition is also very important. Sometimes just having the idea, having a very interesting idea, having a high growth idea is not just enough. Also, the investor really wants to see the competency of the team behind that idea. This is also very important. That's why you see sometimes even some people, when they are very early stage, they don't even have traction, but they get investment more than people that have traction. At that point, the investors are investing in the people first because they trust them. They know that they have the competency, the quality, the skills to be able to use the money very well and grow a very commercial business. So team is another thing. The product we're offering is also key. How our product is structured is very important. If your product is designed in a very rigid way where it doesn't have the potentiality to scale, then that will not be able to attract investment. Then also the market size is another key area. If your market is very small, investors might not find interest in your business. So you need to be able to start thinking through, how can I have a very sizable business that will be able to yield commercial value for the investors? That's another thing that you have to look at. Then your business model is one of the most important as well, because this is where you start connecting your business to your customers. This is where you do the magic. What are your business compositions? What are you selling? How are your customers actually interacting with your solution? What is the revenue model? How are you selling? What is the pricing model? Is the pricing model very very comfortable with your customers? Is your revenue model very viable for your business to be sustainable? Because sometimes we run a revenue model where our cost is even higher than our revenue. So at that point, our business is not sustainable. So you need to be able to prove to the investor that the revenue model you are using in the long run is going to be able to help the business to break even and be able to become profitable. So in the next couple of minutes, we are going to talk about each of them one by one before we go into having the practical session. So here we're talking about the problem. Like I mentioned the first time, when you start creating your pitch deck, if you look at most of your pitch decks, the first thing you will see is the problem or the why. So at that point, for me to get interest in terms of even wanting to listen to you more, the problem you are solving needs to hit right. It has to be able to be something that makes sense. So most of the investors are now driving into impact-driven investment, but it is also commercial. So they want to see, are you solving a real problem, is the solution you're bringing, is it desirable? Is it something that customers really want? Because why this is very important is because when you don't take enough time to think through the problem and you just create a business just for the sake of creating a business, you will see that you will spend more energy to convince people to buy your product or to buy your service at that point. Reason being that maybe it's not something they really want. So for example, maybe in your area or where you are, people are looking for a better way for transportation, a better way and an affordable way. So maybe they have a budget of, let's say, $1 per day for transportation. And because you feel like, I should create a business, maybe you now put up like a flying car or something, for example, which people need to pay $10 for. So at that point, you see, maybe you are bringing a good, there's a problem, you understand, but maybe the solution you are bringing doesn't align to the reality of the customers. So at that point, it becomes very challenging for you to even convince the customers to use your solution. So this is where it's very important to be able to make sure that the problem you are solving is very crucial and the solution you are bringing is very desirable to your customers. So when you are thinking about the problem you want to solve, you are looking at, the first thing you want to ask is, what problem are you really solving? You have to be able to deep dive, learn from the customers. What are the challenges? So for example, if you are solving a problem in health sector, you have to be able to talk to the customers to know what are they actually facing in the health services. Is it accessibility? Is it affordability? Is it proximity? Is it what? So you want to be able to learn where their pain points are and see, okay, this is where there's challenge. Now you want to be able to create a solution that can actually solve that problem in a more user-centric way. So when you have understood the problem, now when you are creating your solution, you want to create a solution that people will like, they can be able to afford, and it will really meet their expectation. So your solution must be able to tick those 3 boxes. Your customers must be able to afford it. Your customers, it must really solve the problem that the customers are facing, and also it should be very sustainable for you as well. So the problem must be that relevant to your customers. And another thing that the investors want to hear is, why is it urgent? Why should we invest? Why is it important that you are doing this? You are running this business now. Why now? So here you have to be able to show them the urgency in terms of, like, if we don't solve this problem of healthcare by this time, maybe in the next 10 years, we're going to have the mortality rate, the death rate might increase by 10% due to this problem. So this is the right time. We have to start tackling it, and this is our solution. So that is why when you are pitching, or when you are trying to connect to investors, you must be able to tell them, why are you solving that problem now? Why is it urgent? Why do you need their money right now? So that has to be very concrete as well. Then you have to be able to have a clear profile of your customers. Who are you actually serving? Sometimes this has been like one of the biggest challenge for investors, or for entrepreneurs and SMEs to raise investment. Most of the entrepreneurs do not have a specific market they are targeting. When you ask them, who are your customers, they say everyone between the age of 10 to 50. That is too much. That is too broad. There's a lot of other differentiating factors in this age group. So when you are talking about the solution, who you are targeting, you have to really break it down to a level where you can be able to define a specific profile. So, for example, if you are solving a problem of accessibility to healthcare in your community, so maybe you are targeting people that live, let's say, 20 kilometers away from the healthcare. or people that are living within $1 that cannot afford to pay $1 for healthcare services. So you need to be able to define in a way that there's a specific demographic of people that you are speaking to. So what this will help you to do, it will help you to create a model that will work for them. And also it will help you to create the whole market acquisition strategy that will work for them. I can give you an example. If you are saying maybe you are targeting people between age of 14 to 50, then now this is a broad group, a very broad group. Reason being that between this age of 14 and 50, there are people living in the urban area, they have access to internet. There are people living in the rural area, probably they have no access to internet. There are people that have enough money to spend on healthcare. There are other people that have not enough money to spend on healthcare. So now, when you are targeting a very broad customer base, you don't even know what channel are you going to use. Are you going to use digital? Are you going to use offline? Are you going to make it subscription-based? Are you going to make it very affordable? So you need, for you to be able to answer these fundamental questions in your business, you need to be able to narrow down the profile of people that you are serving with your solution. So another thing is the other aspect that investors are looking at is the team. Like I mentioned last time, when you might have a very sound idea, the problem is very nice, solution is amazing, everything is concrete. But if the team has little or no experience in that sector, or have no prior business experience, it becomes, or have no very well structured governance system, it becomes very challenging for investors to want to give you money, because investment is a huge risk. Investors need to know that they have a capable hand that can manage the money to scale the business and return them profit. So most of the investors, like the VCs, are using, funds, pension funds, different kind of funds, family funds, and others to be able to give investment. So they need to be able to return this money plus profits to the owners of the fund. So that's why they must do very good due diligence to make sure that there's a competent team behind the business that can really manage the money and bring a actual good value and return to that. So before you start looking for investment, some of the questions you have to answer is your team having relevant technical experience? This is when we're talking about domain knowledge. So for example, if you are building a business in the healthcare sector, do you have someone in your team that maybe is a doctor, is a nurse, or is someone that have done healthcare business before? Do you have someone in your advisory board that has done healthcare business before? Do you have the stakeholders in your team? So there must be some element of technicality that can support that you have the right knowledge and right experience to deliver that solution in that sector. So you must have that technical experience. So here, we're not saying that as a founder, you cannot be passionate and do a business and run a business in a different sector where you are not a technical expert. No. So this is where you start looking for co-founders, start looking for advisory board, start looking for a team of people that can complement your skills, that have technical background in that domain. So with that, you become now a more competent team to drive that business. Other thing is also communication and teamwork. And another thing that investors also look at is dedicated founders. One of the things that make investors to shy away, even banks to shy away from giving people investment or capital, is when the entrepreneurs or the founders are not full-time and they are not working on the solution or a business full-time, because that shows the investor that you don't have 100% commitment to that business, and that is a very big risk for their fund. So one of the things that investors will also look at is how long have you been doing this business, Are you full-time? Do you have other commitments and all that? So this is also very critical when you start looking for investment. So other thing that you also have to tick in the box is the skills diversity. So investors want to make sure that either from your operational team or from your strategic team, you have a multiple skills that can be able to run a business. So we're talking about the people with skills in operations, in strategy, in finance, in project management, in marketing and all that. So there should be a and if you are running a technology business, they want to see someone with a tech experience. So the dynamics of your team is also very important. So what I'm saying this is, after this training, you are going to start looking for investment. One of the things that you have to be able to also check is your team and see where are you lacking and find a way to be able to find someone that can complement your skills. Because when you have a formidable team, it gives the investors confidence. So sometimes you can actually be able to set up like your advisory board of directors. You find people in the industry, experts, to join your team as an advisory member or to be non-executive director and all that. So that kind of complements your team and the knowledge, and that can boost your chance of getting investment. Do we have any questions so far? If you have, I'll give like a minute. If you have any question, you can unmute to ask, or you can just put in the chat box. Okay, great. It's very clear. So we'll continue. The next thing you have to also think about is the product. Your product value proposition and ability to scale is another factor that attracts investors. So investors, I can give you this information for free. Some of the investors, especially when you're going for angel investment or you're going to venture capitalists and all that, they want to be able to, the target of every investor is to have a return on investment at least times 10. So when an investor is giving you, let's say, $100,000, they are looking to make at least $1 million from that deal. So this is where they have to now look at two things: your product and your market. So if your product doesn't have the element to allow it to scale, it will give you, it will not attract the investors. So for example, look at in terms of during COVID, when COVID hit and businesses have to close, we reduced human interactions and all that. If you look at some products that were very physical at that point, most of those businesses closed down and died. Reason being that the product was too rigid to quickly pivot. So since people are not coming outside, people cannot interact with your product, they cannot buy. So those kind of products are what we call rigid products. They are not flexible enough to scale. So investors also want to see, is your product able to meet your common the primary market, and does it have a potential to scale into a secondary market and all that? So if you are offering a service, for example, in tourism, probably maybe in your country or something like that, or in your area, is there a way that that product can really evolve to actually be able to provide services, same thing to people in other countries? I can give an example. So maybe you are having a safari company, a tourism company, and what you do is to connect with tourists and show them, the camps and parks and all that. So now you want to be able to show investor that, my product can actually be able to scale. So currently we are getting our clients, our customers to come to see the parks and all that. But we, in the long run, we are looking to build a virtual safari. So what that means is that people can actually stay in their country and get a tour. You don't have to travel down to Ethiopia or to Tanzania to see the Serengetis or to climb the Kilimanjaro. But we're going to use the virtual reality to now start showing people go through safaris. So I can really stay in my country in Nigeria and climb Kilimanjaro from there. I can really stay in my country in Nigeria and have a whole feel of the Serengetis, of the lions and all that. So with that, we can actually, your business now can actually be able to target a broader and a larger market. So those are the kind of things that the investor wants to hear, that there is an element of scalability in your product. And also your product is also have reached like a market fit. So for example, I can maybe talk to you about when I mean product market fit, which is something that you have to be able to reach to be able to start speaking to bigger investors so they can be able to give you money to scale it. So when you start your business, you have your initial product, then you need to validate. You want to be able to measure some kind of things. You want to measure, am I offering the right product? Am I using the right channel? Is my pricing very convenient for my customers and also for me? So you are testing all of those assumptions. And when you are testing, you are now kind of iterating the product. So when your product reaches market fit, it has to take 3 components. These are things that you have to really pay attention to when you are trying to get your product to reach market fit. One is desirability. Your product must be able to offer 100% value to your customer. They should be very satisfied that your product is really solving their needs, is meeting their needs 100%. And they are able to afford your product. They are able to pay for it without challenges, and they are able to pay according to how they are, according to their own consumer behavior. Then another thing you have to look at is the viability. Your business must be viable enough that for it to be sustainable for you. So your revenue models have to be something that maybe in 6 months, in 1 year, in 2 years, you can break even and you can have some significant growth. And the last part is the visibility, that the solution, the product is not too technical to implement. It shouldn't be a problem for your consumers to use. It shouldn't be a problem for you to be able to implement. So those are the kind of things that you measure when you are going for product market fit. Then another thing that investors also want to know is that your product has the ability to become a top earner in the industry. So if maybe you're in the healthcare industry, they want to know that your product can evolve into like the mother of products in that sector. So for example, if you are running an e-commerce business, there's some elements that actually make up e-commerce business: the supply chain, the fulfillment, the payment integrations, the product and vendors. All of these things are components of an e-commerce. So they want to know that maybe in the long run, you can actually be able to build an e-commerce hub where you manage fulfillment and payment. So that means at that point, when you have a hub, even other e-commerces that competitors have to plug into your hub to be able to access your services for fulfillment or for payments and all that. So at that point, you turn your competitors into your partners and you make money from them as well. So your investors wants to know that you have a plan to be able to disrupt your industry and become a top gainer in the industry. And also, your product must be able to pivot. And maybe at the point of any changes in the consumer behavior, in technology, in anything, your product should be able to have a space where it can actually be able to evolve to continue to remain relevant to your customers. So these are some of the things that you have to be able to look at in your product. The key, another big aspect is the commercialization of your business. The commerce is very important to the investors. The size of your market is really important. If you are asking an investor for $500,000 and your total obtainable market is $1 million, it doesn't make any commercial sense. So investor wants to know that when we give you $500,000, at least your obtainable market should be able to worth maybe $100 million. So that then it makes a commercial sense for them, right? So what other things that you need to do here is, running your product analysis, understanding what are the key things your product is offering. What do you offer with your product? The next thing is the competitive advantage. You have to kind of analyze who are the other key players in your sector and how are you different. This is very important. The investors want to know how are you different with your own solution. Your solution has to be able to create maybe a bigger value, a different market entry strategy that will make it more unique than other competitors. So from there, you can now start identifying your obtainable market. So when you are now looking at your obtainable market, you are now looking at the total market, the total addressable market. The total addressable market is every person or a customer that uses your service. So for example, maybe in your country, there are 20 million people that are spending $1 billion in healthcare. So that is like a total addressable market. But you know that there are other competitors, there are other players in the market, and you have created your own niche to say people you want to serve are people in the rural areas that spend less than $1. So maybe this number is 1 million people, and they're spending $1 million per month. So that means they're spending $12 million per year. So you want to be able to say, this is the total addressable market is 1 million market, but our current obtainable market is a $12 million market because we're targeting this specific profile of customers. So you need to be able to learn how to be able to break down your market and know what are you expected, the customers you are expected to serve at what particular time. So when your market size must make sense, it must show that there's a room for commercialization and it can scale even beyond your country. The other aspect is, so with the business model, this is where you now actually show your business value chain. How do people interact? So investor wants to know, how do your customers even interact with your solution? How do they interact with your product? How do they interact with your services? Here, you are now showing, maybe with infographics or anyhow you want to do it, that this is my product, this is how we take it to the customers, and this is what it does for the customers. That has to be clear. So maybe you are go back to like the healthcare, you are using maybe USSD to send health information, to connect doctors to patients. You have to be able to show that our solution is powered by a USSD program that connects the doctor to the patient. How? The patient will dial this code and doctor gets information and return the information back to the patient. So you want to show all that journey, and also you want to be able to show your revenue model. How does this make money for you? Is it a subscription? Do people pay subscription, or do they have to pay per service, or do they pay? Do you get commission from the doctors and all that? So there are different revenue models. You have to now choose the one that best fits your market at that point. Then the next thing is also your pricing model. How did you come about the pricing model? How did you come about a model that you feel like this is the best that works for me and my customers? So maybe your customers are people that earn every month. So that means the time they get money is at the end of the month. So maybe you want to be able to create a pricing model which is focused on subscription so they can pay at the end of the month. So that becomes very convenient for them and also convenient for you. So your revenue model or your pricing model has to be explained, and the reason behind you think that this is the best approach to be able to deliver your service. Also, you have to also show clearly how are you currently acquiring customers. How are you? What is your plan to? What is your other strategies to continue to acquire bigger customers? Are you doing, door-to-door sales? Are you doing adverts? Are you doing campaigns? So you have to be able to show what are you currently doing to acquire customers, and when you receive the funding, what are you going to do differently to be able to increase your acquisition strategy, to increase the number of customers you are acquiring. Also, you have to show maybe your cost of operations. What does it take? This is where you talk about the unit of economics. So what does it take to acquire one customer? And in the long run, how do we get that money back? So for example, if it takes you $3 to acquire one customer and the customer pays $1 per month on subscription, so that means it takes 3 months for you to make back the money. And in 12 months, you are getting at least 150% investment rate of return at that point. So you have to be able to show clearly why is it viable to spend that money to acquire a customer, and in long run, how will the customer be able to pay and give you profit. So other things that investors also want to see are this. They want to see you have a clear milestone planner. So a milestone planner is, I want to give you $100,000, but I want to know how are you going to spend this money? What will this money do for you in the next 1 year, in the next 2 years? So those are the things that the investor wants to see. The other aspect is the data room. The data room is where it's very important when you are going to look for any kind of investment. Documentation is very important. So you have to be able to keep all your relevant information in one area, one folder, or in one file, or whatever the case may be, because the investors, the angels, the bank will definitely ask you. They want to ask you for your contracts. They want to ask you for your cash flow statement. They want to ask for your audited financial statements. They want to ask for your governance structures and policies. All of these things you have to keep in one room. Can you hear me now, Mihanta? Can anyone hear me? If you can hear me, can you say something so I know you are hearing me?
Yes, Francis, I can hear you. David is here.
Okay, great. All right, Mihanta, maybe, okay, great. Mihanta, maybe you can maybe rejoin again. So other things that can hinder you from not getting investment is when you don't have all your records in place. At least 50% of your records should be in place. So after this training, if you're not keeping your records, you have to start keeping your records. You have to keep maybe your cash flow statements, your profit and loss statements, your bookkeeping, your audited statements, your policies and governance structures. All of these things you have to keep in the document, in your business plan. All of these you have to keep in the file, so that when an investor will ask you for these things, it's very easy to share with them, because they want to, these information, for example, your cash flow, your profit and loss statement, your audited statement. These are the things that they analyze to understand your company's sustainability. So if you don't have this, it becomes challenging to even for them to be able to fund you or know the capacity at which they can fund you. Then you can also be able to learn about your ideal company valuations. So there are different, after this session, maybe next week, I will share with you guys a document on valuation. You can be able to read your own. So valuations are, trying to understand what does your company value. There are different ways to value your company. There is a benchmarking strategy. So for businesses that do not have a lot of revenue or that are young, you can be able to use a benchmarking strategy to know, what maybe I am in the tourism sector. You want to know maybe benchmark other bigger tourism companies in your country or in the continent, that you now put them at your age when they were at maybe 2 years or 3 years. What were they valuing? What was their attraction and all that? So you can use those kind of benchmarking to be able to create your own valuation to say, we worth $300,000 because of 1, 2, 3 things. For more matured businesses, there's a beta process where you're using, the revenue, the market size, the assets, and all of these things to be able to create your company valuation. So I'm going to share with you maybe next week different valuation sheets that you can be able to try in your own space. So we have the business compliance. This is also very important. Most of the time, this is especially for people going for debt. When you're going for debt financing, maybe for the bank and all that, they want to make sure that you are very compliant, you have the right licensing, you are meeting regulatory commitments and tax commitments and all that. So all of these things shows like a good standing for your business and also shows credibility and also increased trust from investors or from banks that want to give you this money. So these are some of the things that you really need to work on before you now start saying I am becoming investment ready. So there are different kinds of funds. So I will also show this is where you start learning about who should you approach at what point in time. So maybe you just started your business last month or 2 months ago. It doesn't make any sense for you to go to stock market or go to the VC to look for money, because those people invest in people that have really good traction. So there are different ways you can be able to get money. You have the family and friends, you have the angel networks. The family and friends are the closest people that you know that can be able to give you small money here and there to prove concept and to be able to prepare for external investment. Then we have the angel networks. The angel networks are private investors that come together to put money in your business. They don't only just put money, they also give you technical support. So these are people that take the bigger risk. These are the people that invest in you even in a very early stage when you have very little traction. They are the ones that see the possibility to say, you are running a very good business. I think when we give you small money and give you technical support, we can help you scale it. So those are the angel networks. We have the micro VCs. They're almost like angel networks. They also provide venture building and provide some amount of money for you to scale. Then we have the venture capitalists. The VCs are the ones that give you capital now to be able to scale. Maybe you have received some money from angel investors and you want to scale. So like I was saying, I think I was here, sorry. Yeah, so the VCs are the ones that will give you maybe 200,000, 500,000, $1 million to now maybe scale, expand new market, build new technologies, expand your team and all that. So VCs are probably, they build upon other smaller investors like the angel investors or micro VCs and all that. So when before you go to the VCs, you actually have got something in place, at least some very variable traction to show revenue, to show you must not be profitable, at least have revenue that shows that there's opportunity in that market, have a very strong team, and show the need for the money and how that money will convert to acquiring times 10, times 100, or times 1,000 of your current customer base. Then you have the stock market. So stock market is like where you go to go public. This is after maybe you have received like VC funds and now you want to be able to go public and sell most of the shares. So you have enough money to now grow rapidly. Maybe now you want to go across Africa. You want to be able to become a brand that is sustainable, become a household name. Then maybe you want to go for stock market at that point. So where you go to initial public offering, which is IPO. So these are some of the funding types. There are funding models as well, which are like the debt. Debt is where you have you have like a loan. So either you are going to the bank. There are also VCs that do debt, so they can give you money that you have to repay with some amount of interest. So sometimes most small businesses that are a bit not looking to scale too big very quickly, they can go for a debt because they want to be able to have a working capital that can give them enough revenue and they pay back the debts in a specific timeline. So there are debts, you can go to the bank, sometimes you can go to some VCs that do debt. Then we have revenue sharing. Criteria, you want me, which one do you want to, the funding type? You want me to go back to the funding type?
Yes, please.
Yeah. So let me just add here. So that's the funding type. Would you want me to repeat the explanations, or you just want to see the slide?
Yes, I just wanted to see the slide. I missed on some points, but I understand. Thank you.
All right, great. So yeah, so these are some of your funding types there where you can be able to get funding. And this is now, so the revenue sharing is sometimes people give you money to share revenue. So this basically also for SMEs. This is mainly sometimes for SMEs. So where you can take in maybe $100,000 from someone and say, this money can help us to scale our operations, and we can be able to acquire this amount of customers, and every month we can be able to share revenue. So maybe if I give you, let's say $100,000, you can say maybe in that business, you can share revenue for 4 years. And within these 4 years, I should have given you the $100,000 and in a multiple of 2. So that means in 4 years, with the revenue sharing, you should have received $200,000. So this sometimes this basically work for the SMEs. Yeah, so Mihanta, stock market is the stock exchange market. Stock exchange market. So this is where you go public. Where you now start selling your shares to the public. You start selling your company to the public. So you can have like maybe 1,000, 5,000 people buying small unit of your company. So you go when you go public, then you do not have a full primary control again over the business, because you're going to have like the board of the shareholders meetings, the board of directors and all that. So it becomes a public company. That's like the last stage of of funding. where maybe you have received funding from the VC, you have grown very rapidly. Now you want to become maybe a regional brand, you want to sell across the region, you need a lot of money to be able to scale and become a stable brand. Maybe you want to now go for IPO. IPO is the initial public offering at a stock exchange business. So you have like the New York stock market, you have a Dar es Salaam stock exchange and all that. So each country have at least a stock exchange market where you can be able to sell go public and sell your company to the public. So we have the equity. So equity are basically where people invest in your business to be able to get some shares of in your business. So maybe your business is valued at $1 million. And so that means if I put in $100,000, so that means I will get 10% of your business. So this is sometimes the VCs use this, and if I give you the 100,000, I will now give you maybe a new valuation to say now you worth 4 million. So in your next raise, I want to be able to convert my preferred stock to a common stock, and I'll be able to sell them. So some investors will go for equity. That gives them a stake in your business for the time being when they're going to support you to scale until they will sell it maybe to the new investors or until they sell it at IPO. So, or sell it back to your company. So there are different options to that. There's crowdfunding, although in Africa it's not been very proven in terms of the crowd raise, but even I see something that is coming right now. People are now having, in the US it's very common, where you can be able to raise funds through crowdfunding platforms. Some of them can give you options for grants. Some can give you also options for equity. So that means you can actually be able to sell some of your shares through crowdfunding platforms. So there are a few of them. There is Get Equity in Africa. So Get Equity is helping entrepreneurs and companies to raise funds through crowd raise, and you sell some shares of your company. Then there are other forms, other crowdfunding options as well. So what's crowdfunding? The advantage of crowdfunding is that sometimes you don't have to go through like a very rigorous procedures and due diligence like how you have to go through when you are going to the VCs. So the crowdfunding actually help you to structure out your business and help you raise those initial funding to help you scale. There are also matching funds. So matching funds are like funds you get from development partners to support you to scale. So for example, maybe you have a capital of 100,000, but you need to be able to reach like a market that needs 200,000. You can actually get a matching fund from development partners to help you reach your next business milestone. These are some of the funding models, but there are also other ones you can actually also be able to explore. So does it make sense? Do you have any questions so far? So I will want us to practice now how we can be able to look at where we are with our investment readiness. So I'm going to paste this link. There's a link I'm going to put in the chat. Please open the link and I'll show you how it works. It's very easy. So what you do is you just answer those questions and we'll be able to know where you are in terms of your investment readiness. So what you do here is you go, put it in your browser. This is what you see. So what you do is you go to you go here, join as entrepreneur. You click join as entrepreneur. Oh, sorry, I already logged in. Let me log out so it's easy. So when you go to abaka.app, Then you go here. You go here. So you click on join as entrepreneur, this place. Then when you click on that, you go to start. You see this place where you have start assessment. So when you start assessment, you fill in this very simple information. You see this. So we can just, I'm doing a demo, BIC Africa, I can put my email. So for example, something like this. I have to put that, city. You put your city, you can put your sector. And put that. Then you see you've read, you tick this, you read, understood. Then I put continue, I continue. So when you click continue, you can now start doing analysis. If you look at it here, the first one, there are three, these are the lines, the reviews you're going to make. These are things that show your investment readiness level. So the first thing is team, second one is problem and vision, third one is value proposition, fourth is product, fifth is market, sixth is business model, seven is scale and exit. So what you do, look at this measuring scale here. It's always at the bottom. So for the team, read these things at the bottom, read this thing. This is where, if this is where you are, you leave it there. If your team, you have, maybe you have 2+ co-founders with differentiated skills, then that is fine. If you move it to, let's say 2, you will see that it's showing our team has personally experienced the problem. That means your team that shows that you have more than 2 co-founders. Your team also have experienced the problem you're trying to solve. The more you move it, so it shows you where you think you are. So you will decide by yourself in terms of where do you think you are as a team. You see, you decide, say maybe now your team have a clear strategy and understand sales, or you already have a management team, or you have an executive team. So whatever you feel like you are, you put the scale there. You put the scale there. So once you put the scale, you go to next category. Next category is problem. So here it shows, maybe here you say you have identified a specific problem and a large problem. Here, that means you have identified a problem. Maybe here you have a vision already. There you articulate your vision, offer, and the value proposition. Here, so something like that. You decide, you have to be honest to know where exactly are you in this value chain like this. So wherever you are, you keep it, you go to the next. So you do that to the last one. So I will give like 15 minutes. 15 minutes for each person to do this, so that we will maybe use 1 or 2 to evaluate the investment readiness level, and you can also be able to practice after now. So maybe 15 minutes, please. You can work on your own with the link. I sent the link already, and I showed how it works. If you have any question as you are doing it, please don't hesitate to call on me, and I'm happy to support. So we'll have like 5 minutes. So it can maybe be fast. It's very easy. So we can be able to analyze one or two. Sorry, Mihanta, I will also share the link. You can also be able to do it later. So I wanted to ask, has anyone managed to finish? Anyone managed to finish? If you manage to finish, you can write in the chat box so I know. No, continue to the end. You stop at investor exit. Continue to the end. Stop at investor exit. Did anyone finish because of time? Did anyone finish? If you finish, you can write in the chat that you finished. Next 1 minute, we have to stop. If you finish, you can write in the chat. So we are almost out of time. Is anyone that finished? Otherwise, I can show you how it looks like. So when you are going to finish, it's supposed to look like this. This way. It's supposed to have, you can be able to print this and see where you are. If you look at this, for this one, the person is at the stage 3, level 3 of investment readiness. So you see what they need to work on. You see, it will tell you what you need to work on. These are things that they need to work on. All these are what you need to work on. So it's also a milestone planner. So when you plan, it tells you, what are the next steps you need to work in each of the categories. So in your team, it will show you what you need to work on, and a problem, what you need to work on, in the product, what you need to work on, the market readiness, all of these things. So as you continue to work on each of them, you see your level continue to go up. And when your level goes up, and if you look at here, it also shows you it also shows you what type of investor you should be able to contact at what level. So when you are at level 3, you should be talking to family and friends and maybe angels. When you go to level 4, you should be talking to angels and family and friends. When you go to level 5, you should be talking to VCs for seed and angels. Level 6, VCs, level 7, VCs. So it shows you who you should talk to at what level. Then when you get to level 9, that's when you now look at going to stock exchange, going to IPO. So the app, you can continue to work on it and also set up use this as a milestone, your milestone planner. So as you continue to grow your business, you'll be able to know at what investment stage are you and who you should be able to talk to. I don't know if that makes sense. If you understand. Yeah, okay, great. Thank you, Mihanta. Yeah, it's very, you can continue to use it, continue to build your business. It becomes easy for you to know where you are with your business. All right. So thank you very much. If you have any questions, I can take the questions right now before we close. Any questions? So if there are no questions, will be did you finish, Lorena? Did you finish? I can show you. So if you want to see your results, what you do is, okay, great, Lorena. So let me show you how you see your results. Let me just finish this, then I'll show you. Just an example is this. When it goes like this, you just answer like just a very few questions. Here, just you just answer very few questions. It's not a or whatever you choose. So you have to submit. When you submit, it shows like this. It shows like this. Yeah. So you can just set your password. it shows this is where you are. It shows, you know, where your level, this is where your level is here. So for you to see the full one, you just go to set your password. You just set password. It will take you now, when you set your password, it will take you to where you can log in. So once you log in, it will be like, it will look like this. Then you can find your results here. So if you find your results here, you see this print, you will see this print. You can watch this video later. You see this print icon. When you click on the print icon, it shows you this, the results. So that's how you can find yeah, so you can be able to find the result like that. All right, thank you very much. We're out of time. So if there's any question, you can always ask me. I'm in a group or anywhere. And try to use this link to be able to set up your planner and be able to grow in that way. This tool will actually help you to be able to structure your business, understand your weak areas, and how you can be able to strengthen them. And you can actually become investment ready in that aspect. So thank you very much, everyone, for participating today. I will also share with you the recording and also the presentation and the evaluation tools as well. And I'm hoping that at the end of the day, you can be able to use this learning today to make your business more investment ready and be able to scale. Thank you very much, everyone, for attending, and looking forward to speaking to you next week again. Bye.